When the market gets chaotic, it's easy to miss the real action. Today, we're looking at three fintech giants, Intuit, Adyen, and LendingClub, who are making some seriously big moves that could really reshape the future of finance. We're going to go behind the headlines and break it all down. Let's get into it. You know, this quote from the FinTech Stacks newsletter just nails it. While you see everyone online panicking about market swings, the real story is happening kind of behind the scenes. It's not about the short-term panic, it's all about the long-term plan.
All right, so here's our game plan. We're going to start with Intuit's pretty brilliant AI strategy. Then we'll dive into Adyen's first ever acquisition, a huge deal, and wrap up with a look at LendingClub's incredible performance. Then, at the end, we'll connect all the dots to see what this whole thing means.
Okay, so let's set the stage for these massive moves. Look, with the Fed playing it cool and the markets getting jittery, it is so easy to get sucked into the daily drama, right? But the real story, the one that actually matters, is happening underneath all that noise. These companies, they're not just reacting, they're out here actively building the future.
First up is Intuit. And listen, this is not just another boring AI press release. What they're doing is more like an AI Trojan horse. They're literally moving inside the brain of the whole operation. So this is not just another chatbot slapped onto a website. Intuit is embedding its entire platform, I'm talking TurboTax, QuickBooks, Credit Karma, the whole shebang, directly into the AI assistant Claude. It's a full-on integration, it's available for everyone, and you can even get patched through to a live human expert right from your AI chat. This slide just says it all, doesn't it? The old way was, hey, let's build our own AI product, but Intuit's playing a different game. They're making themselves the essential financial plumbing inside the AI tools that millions of people are already starting to use. They're becoming the infrastructure itself. By getting in this deep, Intuit has basically transformed a general-purpose AI into your own personal financial genius. Think about that. The implications here are absolutely massive. Okay, on to our second power play. Let's talk about Adyen. This is a company that has been famous for its build it, don't buy it attitude. Well, until now. I mean, this timeline really shows you how huge this is. Adyen started back in 2006, and for almost 20 years, their philosophy was simple: build everything yourself, zero acquisitions, and then bam, they dropped 750 million euros on a loyalty platform called Talon. So what on earth is going on here? Why this sudden change? Well, the answer comes down to this idea of agentic commerce. This is the future Adyen is betting the farm on. Just imagine your own personal AI assistant making purchases for you. In a world like that, the final decision at checkout is going to happen in a millisecond. And the key to winning that sale? It's the ability to push a super personalized, real-time loyalty offer at that exact moment. And that's really the bottom line for Adyen. They're moving way beyond just processing payments. By buying Talon, they are making a massive bet that controlling customer identity and loyalty data right at the point of sale is going to be the most valuable real estate in the future of AI-driven shopping. But hey, not all power plays are these big, splashy, headline-grabbing deals. Our third move is about something just as powerful: quiet, disciplined, rock-solid execution. And for that, we're looking at LendingClub. Just check out this number. In the first quarter, LendingClub posted a mind-blowing 340% year-over-year growth in earnings per share. In a shaky market where a lot of fintechs are struggling, a number like that, well, it makes you sit up and pay attention. And it wasn't just a fluke. They also hit a record $67.3 million in pre-tax income. This is a company that is just executing perfectly, showing all the signs of real, sustainable profit. So you might be asking, what's their secret sauce? Well, this number is a pretty big clue. Over 90% of their loans are now issued using an automated AI-powered process. This isn't just about lending smart, it's about being incredibly efficient. That same AI wave lifting Intuit is also turning LendingClub into a lean, mean, money-making machine. So while everyone else is out there chasing hype, LendingClub is just proving that a relentless focus on the fundamentals, on just plain good digital banking powered by smart tech, is a surefire way to win. And those numbers, they do not lie. Okay, so we've looked at three very different companies making three very different moves. Now let's pull it all together and figure out what the big picture looks like. This table really breaks it down perfectly. You've got Intuit embedding itself into the place where you think, inside the AI itself. Then you have Adyen buying its way into the place where you shop, that critical checkout moment. And finally, you have LendingClub, just crushing the fundamentals of banking through pure, simple execution. And this right here is the ultimate takeaway. You've got a Trojan horse, a strategic buyout, and just pure operational excellence. Put them together, and they paint a really clear picture of how the battle for the future of your money is being fought as we speak. So, as more and more of our financial lives and decisions happen inside these AI platforms, who actually wins? Who owns the customer? Is it the company embedded in the AI, the one that controls the payment, or the one that just has the best, most solid product underneath it all? That is the billion-dollar question that all of these moves are trying to answer.